and welcome to today's lesson brought to you from To The Tick. And today we're going to talk about the term reference point. What does it actually mean to traders, and how do we apply it to the market? When and where and why, and what do we want to know about this term? So first, let's look at a combination of dictionary sources for a definition, a point to which other points, lines, and so forth are referred, usually in terms of distance or direction or both. An indicator or signal that orients you in general terms. Sign or indication that refers to another source of information. Relation to or concern with something specified, something that's connected or linked. Again, linked to that other source of information. It's a stationary point constituting a standard for measuring or describing the location of something. And related terminology would be benchmark and landmark and lubber line, a good sailing term, and target, mark, staying with the mark, and buoy and compass, and hikers, sailors. They have a fixed reference point on a northbound compass. Then you use GPS coordinates. You can map exact location, and everything else revolves around that point. They can tell you where to get ice cream, 2 blocks down, all from a reference point. Military, they sync their watches before they go on a mission together. Astronomers are using planets and stars for their points of reference. Mathematicians. A buoy not only marks the hazards and harbor channels, it's actually attached, but it also is placed on maps. It's usually got lights on it, so it's just used all over the place as a reference point for everyone to know where you are. Football, in a game, line of scrimmage. Where are the rules? It's basically within whatever context you want to look at it. It's a mark or marker for everyone to know where you are. So when we look at it in traders' terms, we can use a tool like a great big long-term view of an investment. Charts, the visual representation of a specific price action, volume, and time. Notice that the color-coded shape markers, these are trader choice reference point areas, are marked to identify key components, and they're related to each other in all the same elements: price action, time, and volume. This is the importance of establishing reference points, to understand that the relationship between all the elements of the data. It's this big ongoing picture of your instrument, and sometimes you fine-tune areas like we did here in video 1 here on our chart, and you blow up this rectangle and you come inside working into a chart smaller than that big picture. You're coming from that big bullish base. Your reference points are matched in both of your rectangles. Both charts mark the same pictures. These are a fine-tuned picture. You can come in smaller, 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 whatever size you want to trade. The point is you learn how to look at the patterns, and then you can come in and decide what you want for risk and reward. The reason to incorporate this type of information should be fairly clear here. Using this big example, our big bright blue dotted dashed line became a major base of support that has not been touched, revisited since. And the pivotal point where they broke out, expressing that first impulse of energy that we marked from our purple line in our pole, creating our concept of our big trade here, our big first pattern, this entire pattern comes back and like a big magnet draws that price action back down after that big explosive move there, just so they can reload and do it again. Take that big trend continuation trade higher. Message still clear on your bright blue line that nobody's touched me yet. Is it important to look at these different perspectives, concepts, and different time frames? Your chart itself and the relationship between charts, remember to compare apples to apples here. These different history will help mark these key reference points for you, help identify those opportunities in the future. And then, as a little side note here, just on my own, a final thought: if you ask someone how far is it from here to there, nobody'd have a clue of where that was if you didn't tell them where either here was or where there is to start. You got to have some place to start. And without that reference, as a starting point and an end point or a unit size, how would we measure anything? Temperature, distance, time, or size? We strive to get it right or better all the time. And as a consequence, we change references so that the math will be perfect and repeatable. After all, the earth was flat at one point, and so all the math had to be changed. We measure things like the earth's rotations and degrees Celsius. All those things are measured differently now. It changed the math. And basketball, they never had a three-point shot. It changed a lot of the math. And all the consequences for all the players involved. All of those traders involved. Okay? Let's just say. So a reference point is something that you can always look back to make sure that you're in the right place and on track with that ongoing process or flow. When we put that into a strictly trader's application, defining reference point here, the reference point for everyone is something that you can always look back to make sure that you're in the right place and at the right time and on track with the market's process. So thank you, and happy to have you join us. Come and subscribe and learn with ToTheTick.com.